Good morning, everyone, and welcome to a new episode of Tradomics. Today, we are shifting gears from our usual focus and diving into an in depth analysis of the Philadelphia Semiconductor Index. At Tradomics, we specialize in market analysis with a particular focus on US stocks, but our scope goes beyond that. So, studying the key benchmark indexes help us better understand market trends and how they related to individual stocks. So as always, we will be applying our proven methodology, which is the T cycle analysis. If you want to know more about our methodology and if you're new to the channel, you can click on the pop-up banner menu on the right-hand side. So having said that, let's get it started. In order to better understand at which point in time the Philadelphia Semiconductor Index is, so we have to shift our focus back to this law here that was made on the 13th of October 2022. This analysis will analyze the waves of the market by using the cycles and the additional advantage you can have rather than looking at it from a technical analysis perspective is that at the end of the video, I will suggest the statistical probability to have uptrend rather than downtrend in the next weeks or in the next months. Because thanks to our cycle duration here, we are able to have a predictive analysis and to define the higher likelihood of the trend that is going to come in the next days, weeks, and months. And if you want to have a proof of what I'm saying, you can always refer to previous videos that are covering US stocks, that are covering indexes, that are covering Swiss stocks, and so on and so on. So we have already developed more than 75 episodes, so you can always check what we say. And on top of that, in order to give you the proof of what I'm saying, I will leave intentionally arrows to define the higher likelihood in which the trend of this index may develop in the future. Okay, so um, in order to do that, we have to start a little bit back in time. From here, 13th of October 2022, in which we have had a significant low, which is called swing. And from this date, we have had a solid trend. Regarding the cycle analysis, what we can say from this low here, we have had a first cycle, downward cycle that was positive. So the low in which it ended was low higher compared to the low from which it started. And this duration was done after 263 days. So the completion of this cycle happened after 263 days. On the right hand side, you have the legend, and you can always refer to the duration. So for each of the different duration of the cycle, from weekly cycle, 2 week cycle, 1 month cycle, 3 month cycle, and so on, you have the minimum and the maximum duration. So regarding the T plus 5 here, we have a minimum duration of 190 days up to 338 days. And in this case, the first here downward cycle was made after 263 days. Okay. The second yearly downward cycle started here on the 31st of October 2023. And the second downward cycle could be defined from this low here, occurred on the 31st of October 2023, until this low that was done on the 5th of August 2024. If we gauge the total duration, we have 190 days. So 190 days actually is the minimum duration of a T plus 5. Here you can see that I have a question mark because 195 days, it's really the minimum required to have a T plus 5. If we take the minimum and the maximum duration per se, we have to consider that those values are basically those that are less likelihood to happen. And generally, the duration of a cycle is has a tendency to fall into a median duration. Okay, so 190 days is really the minimum required, as well as 38 days is the maximum. Therefore, here it's true that this downward cycle can end it here, but I still have a question mark, because we can have uh, a second part of the yearly downward cycle that can also follow this route. Okay. Um, Also, here we don't have big evidences that from this low we have a T plus 5, because if here we have a T plus 5, we need to go over this high, okay, by definition. So therefore, I will consider this one as either a T plus 5 or something that can be attached to this first structure. Okay, so in order to be more precise, here we can change it with T plus 4 slash T plus 5. So in that case would be 6 months cycle, or the beginning of a 6-month cycle, or eventually the beginning of a nearly downward cycle. Okay. We don't have just to look at the downward cycles, but we need also to look at the upward cycles. Okay, because upwards and downward cycle needs to analyzed all together to understand at which point in time the index is, or any stocks that you want to analyze. Okay, so in order to have a better overview, let's start from this high that was made on the 4th of January 2022. Here you can see that this T plus 6 upward cycle has done a first upward T plus 4 cycle, a second T plus 4 upward cycle, and a third T plus 4 upward cycle. The total duration of this T plus 6 cycle, which is a B yearly cycle, was 393 days. So 393 days, it's more than 338 days. Therefore, this upward cycle has been considered as a 2 years upward cycle. Okay. Um, from this eye, though, that was done on the 26th of July 2023, we have had a positive upward cycle. Positive because the high in which it ended was higher compared to the low from which it started, and this cycle has had a duration of 239 days. So what is the advantage of the cycle analysis compared to standard technical analysis? Well, we have, first of all, different advantages. And the first of its kind is that we can manage time, because the algorithms, HFT, high frequency trading, are set up by different mathematical parameters in order to sell or buy a certain amount of shares. And one of the most important one is definitely time. So this methodology allows you to have the control of the time. And how do you use the control of time in such cases? Well, um, let's take this upward cycle. This upward cycle turned into a positive cycle after 92 days, because this candle here that was done on the 7th of December broke up the top from which the T plus 5 upward cycle was born. Okay. This breakup occurred after 92 days. Now, we know that a T plus 5 duration is encompassed between 190 and 338 days. And when we have a condition in which either a downward cycle or an upward cycle is broken before its minimum duration, we have the prosecution of the trend in which the direction in which the swing was broken. So in this case, it was broken to the upside, and therefore from the 7th of December 2023, we could have expected further downtrend until the minimum duration of 190 days. So basically, you could have buy to any pullback a certain amount of shares, and be sure that the trend was going to the upside, because the time in which the T plus 5 or this candle was broken up, this T plus 5 was not enough to develop its duration. So therefore, you have a really competitive advantage, and this competitive advantage was roughly 98 days at least, in which you could have opened long position and wait until the minimum duration of a T plus 5 to be completed before selling the amount. Okay, and this is an advantage that is terribly incredible compared to technical analysis. And this is why this analysis is called quantitative analysis. Okay. Now, if you want to have further details, you can always refer to the introduction to the T-cycle analysis. Now, let's move more to the short term. What is happening here? So first of all, from this top here, we have the beginning of a T plus 5 upward cycle, because we have already a certain amount of candles or a certain amount of time that is below this top. So therefore, here we have a T plus 5 upward cycle. If we gauge the total duration from this top that was done on the 11th of July 2024, we have a duration of 110 days or 109 days or 109 bars. 109 bars, it's already more than a minimum duration to have a T plus 4. Okay. Now, having said that, we have to further segment time. Okay. To understand where we are. And in this particular case, in terms of upward cycle, we have had what? The first upward T plus 2 cycle and the second T plus 2 upward cycle. This cycle was positive because the top from which it ended was higher compared from the top to which it started, and this one was negative. From this top, we have a 3 months upward cycle. This 3 months upward cycle has done the first T plus 1 upward cycle. Here we can also update the chart with a duration of 19 days. Okay, therefore, here we put a T plus 1 upward cycle. And now we have from this top here to this one another, let's gauge the duration, another T plus 1. Okay, so from this top here, we have potentially the beginning of another T plus 1. And in this case, I can put a question mark. Are we sure that we have a T plus 1? Yes, so we have the minimum and sufficient condition to have a T plus 1 because we have a certain amount of candles below this top. But we have also to consider another factor. If we gauge the total duration from this top to here, we have 43 days. So over the short term, this index from Monday onwards can do just a couple of things. And based on not Monday, but based on Tuesday, we will understand whether we have this condition or whether we have this condition. So the first condition is that if from Tuesday onwards we continue to go to the upside, this cycle T plus 1, so this cycle will be a T plus 1, therefore we can continue to go to the upside until a minimum duration of a T plus 1. Okay, the minimum duration of a T plus 1 is 13 bars. So if from Tuesday onwards we break up this I and we continue to further grow, we can have an uptrend that at least can last until Friday 20th December. And at most, it can last until 8th of January 2025. This is because we're not gonna have a t plus 2, but we're going to have t plus 1, t plus 1, t plus 1. If we will have a condition in which, rather than 3 times t plus 1, we're going to have a t plus 2, we can continue the uptrend until Monday. And from Tuesday onwards, we will have a retracement like this. Like this. Why? Because now we have reached mostly maximum duration for a t plus 2. We have a 43 bars, and we know that a t plus 2 can last until 44. So if from Tuesday we start seeing a harsh retracement, then on the top of Tuesday, or even on the top on Monday, or eventually or even from this one, because we can start already dropping from Monday onwards, then we will have a t plus 2. So you see that how the time here on this channel is important to understand the future direction of the price. And this is just over the short term. But in certain conditions, so for example, if we start going over the stop or even over the stop, we can have a projection not just over the short term, also to mid and long term. So the candle of month, so the beginning of next week on the Philadelphia Semiconductor Index will be extremely important, because if we from Monday onwards we start climbing, then we have the plan A. But if we start going backwards and we have a pullback, that is going to push the price low, and this one is the first checkpoint, then we will have a situation in which a new t plus 2 will be generated, and therefore we will have a retracement, and the first target will be here at $4,863, and the second one will be $4,770. So I hope this analysis has given you information. Okay. Um, I know that if you are landing here for the first time, this is might be particularly difficult, but in case you want to have more details, I invite you to look at our introduction to T-cycle analysis video, also to look some other videos eventually if you have some stock that you have already in your portfolio that we analyze on a regular basis, to better understand how this methodology works. And I can assure you we have an extreme advantage by applying cycles and quantitative analysis compared to the traditional technical analysis. If you want to have notification as soon as possible regarding our videos that we issue on a regular basis, you can subscribe to our channel and put a like if you wanted to support our daily job. Thanks for watching, and see you to the next episode.